into it. All right, guys, let's get into the entries because this was wild, and man. It's really crazy though. Every time, like anyone who's been rocking with us for years, y'all know every time we're about to go into like the banking system or how the markets are orchestrated, all of a sudden, the Wi-Fi just for whatever reason goes crazy. Like at this point, before it was just funny, but now it's like it's a little suspect. Like it's actually, like, whoever's listening, if Brad from the CIA or FBI or who are the ones that tap the phones? They got all caught up, Snowden. What's the acronym? 3-letter word. Y'all know? No. Somebody, y'all know. NSA. Thank you. All right. So if our resident NSA agent, if you're listening, we'll find you too, buddy. But all right, let's dive into it. So, all right, cool. We got people too. So, anyways, so what I was getting at, guys, when we go and we're looking for entries, the way I look for an entry, I'm thinking about motive, right? I'm thinking about what would, right? Don't buy a Tesla. That's a whole other conversation. We got time for that conversation today. But the idea of this is this, and look, we can go through really basic patterns, and I'm gonna do that first. I'm gonna go to the basic patterns and show you guys what I look for when I'm looking for buys and when I'm looking for sells. And I do this in a way where it's just hilariously dumb, simple. Okay, super simple. Now the basic schematic, the patterns that we're gonna find, these will work, but they will work best when you understand exactly the best way to find these things. When you can not just look at the charts for the patterns, but you understand motive. So first, I'm going to just show you guys basic patterns, just draw it up. And then I'm going to explain how you can really, really lock in and how you really elevate your win rate and you actually build confidence with the setups. So I'm going to give you guys the buy setup and the sell setup. And it's like really, really simple. So when we're looking for buys, what we first want to see form is what we call liquidity. Now, most people will know this as support, equal lows. And when I'm looking to get into the market, I'm not looking to get in here. I'm not looking to get in where I have the equal lows. I want to let other people get into the market, right? I want to let the majority get into the market. So when I see something like this, right, when I see support, it's not a sign of entry, it's a sign of patience, okay? So when you see support, it's not a sign to get in, it's a sign to wait. You want to let the market show you its true intentions. At some point in time, right? Not always. This doesn't always happen like this. Sometimes we get this and the market just goes up. And retail traders, which are the majority, the masses, people like all of us, right? A retail trade mindset, they're going to take up these buys. But remember, what's happening during this time is that if everyone, and you guys can answer in the chat, if everyone's getting in at the same prices, where do you guys think their stop loss is? All right. If everyone's getting in here, would you guys agree that the stop loss of all of these people are probably around the same price? Would you guys agree with that sentence? 20 pips above and below, ballpark, the same spot, same spot. Yeah, right. So it's pretty predictable. It's very, very predictable. So once there's enough money baked into the market here, right? Once there's enough liquidity, right? So think about it like this. They got to fill up the pool enough, right? They got to fill the pool up enough with buys so that they can dive into the market. All right. So once they've done that, once there's enough money, once there's enough cash that can be collected, they'll then drop price. Now, I'm not going to get too complex, right? I'm not going to go too crazy into this, but once you see something like this, then the market drops like this. So, however, I want to keep it real with you guys. Just because it does this, it doesn't mean what I'm about to show you always happens. Sometimes it doesn't. So at this point in time, a lot of retail buyers get cleared out of the market. So those stop losses, they get hit. But remember, everything that happens in the market is an exchange of money. So what this means is that the positions here, they were sold at a cheaper price. Someone's got to buy those positions. So now the same entities that drove price down, now they get these entries on the low. Now they get these discounts. All right, so now they get these discounts here. They're getting that, they're getting in because they're literally the ones that create this whole thing. But here's the thing, in order for price to move like this, they also have to pour money into the market downwards, right? They have to open sell positions to drive price down. So there's sells that drive price down, and now we got some buys. So the market will go and make a move like this. Now, this doesn't always happen. That's what you have to wait, right? You have to let this all play out. So when we get a high like this, now what do we notice, right? We had, thank you. We had some equal lows, some support. We had a move that clears that money out. And then we had a high here. Now, however, and this is really important. This is where I see people who start to learn this. This is actually where I see them make a mistake. They think just because the price breaks above that, oh, okay, cool. Now this is ready. No. We need price to sustain up here, right? So we really need price to kind of establish, settle at these levels. So something like this, right? So we want to see price do something like this first. Chill here, relax, settle down. If this is just a wick, and then this just ends up being a wick, then the intention of the market wasn't to get above here and give us that bullish structure. It was just to clear out sellers too. So when we see something like this, remember, we haven't gotten into the market yet. Then we wait for the pullback. All right, so then we wait for the pullback. So at this point in time, this is when we're looking for entries. So once the market gets in this zone, and I'm gonna highlight it right now, then we can take a trade. So right here, anywhere in this area is where we're looking for buys. Now you can refine your entry, or you have a tighter stop loss, and I'll go over that here in a second. And there's a couple ways that you can do that. And there's a couple ways that I do that. But what I look for, we'll take a trade here, and then there's a couple of different ways that we get out of the market as well. But for now, we're just going to focus on the entries. So what happens here is the following. Something like this is where we would be looking to take a buy position. And the reason that we're looking to take a buy here is for the following. Remember, there was a certain amount of money that was intentionally brought into the market that drives price down. So you got a whole bunch of money here that drove price down. When price is up here, the orchestrators, right, the puppet masters of the market, they still have these cells over here. So even though price is chilling up here, they're not going to lose. They're not going to lose. Guys, we've gone through the files, we've looked through the data, and banks basically lose 1 to 2 days a year. I want you to understand that they're losing really 1 to 2 days a year. So they're not going to lose. Like they don't need to, right? You got to understand, right? There are trillions of dollars that funnel through these markets, trillions daily. So why does the market reverse off of here? Because this is what I want you guys to understand. I don't want you to do this because you can just see a pattern. I want you to learn how to take these setups because you understand the motive. You understand the incentive from both ends. So the reason the market reverses here, it has everything to do with the money that was left behind. And that's why you hear a phrase from, from buy to sell or from sell to buy. So at this moment, the money poured in here to drive price down. When price comes back, right? This money, these positions, these orders, they can get closed up. They don't have to take a loss on this anymore. And now there's more money to play with, right? I'll give you an example, really easy example. Let's say you had $500 and you put $300 into this water bottle right here, $300. Now, your $300 are right here in this water bottle. Okay, this is not available to you. And you go away, right? You go to Europe. So these $300 are here in, let's say they're in the US in this water bottle. So you have to go all the way back to the US to get your $300. So once you come back here, once you come back to this, oh, okay, cool. Thanks, man. Thank you. You were holding it for me. Appreciate it. Kept it nice and cold. Thank you. You got that back. Cool. Now you got $300. Now you can put $300 back into whatever it is that you want. In this case, right, we're exchanging sells to buys in the market. So this is the mindset of the market. I mean, we can do a million different examples, but basically there's a little bit of money locked up in here, and until price comes back to these levels, then they can take their money back without taking major losses and then pour it in. So this is how you can get these big reactions. The reason that we get these big reversals at these specific moments, it all has to do with money. And that's what I want you guys to remember. Everything that we do here has to do with money and who really has the most money to work with. And remember, you guys got to understand that whatever traditional patterns are being taught, those patterns don't move the market, right? It's not like, oh, well, there's 3 hits to this level, it's going to go up. Well, why does it go up? It goes up because money gets put into the market. Well, and here's the thing. Banks still fail for the same reason good analysts fail. And it's because of risk management. It's because of over leveraging. It's because of greed. So, because here's the thing, banks still fail because they're still ran by people. They're still ran by human beings that feel emotions, right? So that's why you can basically manipulate the whole system and you can still fail. You can have complete control over the game and still lose the game. It just has to do with your greed. It happens with casinos too. So this is why the market moves this way. So how do you refine your entry? Right, you have this big zone here, right? As soon as right where they start to intentionally push the market to clear out the majority. So you guys see from right here, the market starts to just crash and push all the way down. Everywhere in this blue zone is valid for the market to reverse. Yeah, my internet's about to go off again, I think. Y'all let me know if you can still hear me. Huh? Good? All right, cool. So let me get off this. I don't know why it's tripping. So there's a couple different scenarios that we can take, right? Now I'm going to teach you just one, because this is all you need to do. This is the craziest thing. You don't even need to do so much. Simple. All right. So you know how we had support here? All right, we have support. We call this liquidity as well. So when the market gets into our reversal zone, if you want to get some pretty solid risk to reward, then we're going to take an entry based on where we had support before. So we don't buy off of support. We buy off of where support was, but only after we get our institutional sell, only after we get this orchestrated push. So before we ever buy off of these levels, because these are still relevant levels, this is still an important level. It's magnetic, right? We call this, supply, like supply and demand. So there's a need for the market to be at this level. But this is only relevant to us after the market gets shaken up a little bit. Right? So this is where we can take some light entries, right? Place a little stop loss here, and we can look to exit the market at, different places. But in terms of entries, right, and specifically with buy scenarios like we have here, this is what I want you guys to do, right? I want you, like, it's the most simple, the most basic thing to look for. And now, again, this is going to be more probable when we're looking at something like this, setting up on higher time frames, or when we see, the 4 hour, the 1 hour, the 15, the 5 minute, all bullish. So when everything's in alignment, that's when we can take some pretty solid entries and have higher probability. But and also there's a couple other things that make these even better. So this alone will get you like incredible opportunities. But there's other things that will make it even better. For example, some of you guys trade indices with me on Go Live. And you guys know I use the divergence between NAS, US 30, and S&P to execute, right? Knowing that makes that changes the game, because we can time out so that we don't get wicked out. But for now, what I want you guys to do is this. I want you to just look for this in the market. Right now, you want to just focus on training your eye, and that's it. Right? You just want to focus on training your eye. Some of you are going to be at different levels, and I totally get that. But on top of, just being able to see this, there's one thing to identify a pattern, and there's another to execute on the pattern. And I say that because every once in a while, what happens is you'll see it, but then you just won't take the trade. And you don't take the trade because you're living in the past. You won't take the trade because you lost the last one, or the one before, or the one before, or the one before. So you have to be willing to actually take the setup too. You can't live in fear. And the fear or the hesitation usually comes from your risk management, or it comes from, having to, you're looking for results too quickly. You're putting a lot of focus on when you get paid instead of just who you are and what you're doing. So right now, the homework for everyone is this, and I want you guys to find 50 different setups like this, right? 50 different setups like this, and just back test. So what does that mean? You guys can do this. Do it with NASDAQ, actually. Just look up NAS and then go on the 5 minute, and just jump back to a random date in the past. So, and I'll do this with you guys right now. So this is the buy setup. Here's the basic principle here. And actually, I'll give you guys this. This will be the TP here. Look for this, right? Look to get in exactly how I showed you guys, and then look to get out where the equal highs are here. So, and I know we weren't really going to talk about exit strategies, but one way, right, to get out of the market is where there is liquidity, right? Well, when you see equal highs and you're looking for a buy, then that's where you can get out as well. So here's an easy, super basic setup. And then let me give you guys, here is entry. All right. Real nice and simple. I'm not going too deep because I know there's different levels of understanding. But here's the thing. This isn't actually supposed to be hard. Like, this isn't supposed to be hard at all. And it's not about what you know, it's about what you do. So here is buy setup. So go look for this. You want to train your eye, right? You're just building muscle memory, Eventually you see this instantly, basically. So I'll go here. Someone give me a random date in history. Any day. Any day. All right. 9/27/22. Cool. So look at this. Go here. 9/27/22. Tuesday. Check this out. I guarantee you I'll find a setup here. All right, I already saw it. So look at this entry here. All right, look at what we got. Actually, there's a couple, but here's the first one. So you have this, right? Look at the way the market moves. This is a beauty. So what do you guys see? You guys see how there's a bit of support here, right? There's equal lows, lows, lows. So you have this setting up, it's cooking. You have price drop right here. Goes down, right? So this clears these lows. Price comes up. It makes higher highs. It's up here for a bit. Drops down. Look at that. It plays off of where we've seen support before. Off it went. Simple. That was on the 22nd. All right. And we can probably go down to smaller time frames and find different setups again. So you can see it again and again and again and again and again. Let me see here. Let me see. Give me another day. All right. I can't go into like way back. It just won't let me. All right. Let's see here. 9/20/29, bro. I can't go. I can't do that. Yeah, hilarious. Yeah, let me go to the future. Right? That's smart though. He's like, yo, give me the setup for the future. September 18, 2020. Okay. Won't let me. All right, cool. Whatever. It doesn't let me go back that far, I guess, for whatever reason. Oh, it's because I was on the 5 minute. All right, let's see here. All right, here it is. It's Friday. All right, we might not get an entry for buys around here. Give me a sec. So September 18, 2020. Okay. Let's see what we can do here. I'll look for a nice little buy setup here. Let's see. Oh, it doesn't let me. Well, all right, here, I'll show you guys what happened today. All right, easy example. So sometimes support liquidity doesn't show up based on equal low. Sometimes it shows up based on trend lines. So sometimes instead of seeing the market do something like this, I'll show you real quick. Instead of the market doing this, and then, clearing it, doing that, Sometimes it doesn't do that. Sometimes you get something like this. And then it clears it. And then we get this guy. So sometimes you'll see the market give us a nice little uptrend, something like that. This is still liquidity because people are taught to do what? People are taught to buy. Oh, look, third hit to the trend line, fourth hit to the trend line, buy that up. Once there's enough predictable buys from the majority, because they're just trading patterns, they're not trading based off of intention. So this clears that out, gives us highs. We want this to hold for a while. Once it doesn't, it pulls back. Cool. We can buy off of one of these levels of previous levels of support. Okay. So I'm going to show you that's what happened today. Today, we see this. So I'll go into a smaller time frame, 3 minute, 1 minute, whatever. I'll do the 1 minute just so you can really, really see it. So look what happens here. And you also see this set up nicely with other indices. So you have, all right, nice little trending lows. You see the market go down, clears up a lot of retail buyers. Price works its way up, makes highs, stays up here for a minute. All right, it's chilling. And then market comes down. What does it do? It starts to create more liquidity. Right over here. There's more, like, you know, because it's leaving these equal lows, it's going to come down and get it. Price eventually comes down, closes out this sell, and the market goes crazy, right? It just pops off. And you know what? You even see it happen again. Check this out. All of a sudden, we see these equal lows, right? We see a lot of equal lows. Support, support, support. Market comes down, goes up. They come back for this money. Look at that. Plays right off of this. That's just aggressively melting. Rejects this, pops off it goes. So again, this is on the 1 minute. Now, the higher probability setups are going to be on the higher time frames. So you want to use higher time frames to understand direction and smaller time frames to understand precision. Is that making a little bit of sense? Is that clicking a little bit more for everybody here today? Now, also, if you can trade against the trend, you could, but understand probability goes down a little bit, and how long you hold that trade for. You don't want to stay in that trade for too long. Okay. And so I'm only going to go over buys today. I don't even want to go over sells because you don't need to. And here's another example from last week. And this was a trade that played out. I was actually at the gym when this one played out. And so we saw the market here, right? What does it do? Look at this. Right. Aggressive push. Also, the last thing I'm going to say is timing. Timing is really important. Because, for example, with indices, guys, indices start to really move in New York session. And specifically at 9:30 a.m. Eastern time, 8:30 a.m. Central, 6:30 a.m. Pacific. That's when the volatility comes into the market. So really your sweet spot for entries, you kind of have a 30-minute window, right? Maybe even 45 minutes to an hour. But from like 9:30 a.m. Eastern to 10:30 a.m. Eastern, the majority of my trades go down around that time. So here we can see, right, price dips down, clears out all of these buys, fills in balance. Some of you might not know what that is yet. And then we get the highs, right? Then we get the higher high. So that confirms that, oh, look, we're bullish. And what's happening, guys? Look at how much buildup there is at the moment. Look at how much money is just, whew, a lot of buys, a lot of buys, a lot of buys. And I'll tell you what, guys, the more the market squeezes, the more it bounces off the same level, the more aggressive that move's going to be to clear out, to make sure all of these buyers are out of the market. And then the bigger the move, the real movement's going to be. So because this was squeezing sideways, right? This is squeezing sideways for, look like about 20 hours. It was just building up pressure, building up pressure, building up pressure, and then off it went. So price eventually came down to our zone, right? They closed out the sells, opened up the buys, and the market went off. And what did I tell you? Look at this. What's the time here? This says 14:30. That's 2:30 p.m. here in Amsterdam. And that is 9:30 a.m. in Eastern time. So exactly on the New York Open, volatility hits, brings price down a little bit, shakes all these people out, and then bon voyage. So I didn't wait 20 hours. Nah. I didn't wait 20 hours. I saw this happen on Wednesday. You know what's funny? I didn't even see this happen Wednesday. All I did was this. As soon as it was in the morning, right? I look at the market and I go, oh, look, these banks left some money behind, right? They orchestrated these sales. Oh, look at, there's some money over here. All right, let me go get that money. So then around, 9 a.m. Eastern to 10, 11, I'm going to pay attention to the market. So I didn't wait this whole time. I have no business waiting. I don't got that kind of time. Let the trade, exactly. Let the trade come to you. So eventually the market comes and then it goes. So we didn't have to wait because remember, there's tools on TradingView. Let's say I would have identified this on Wednesday night. I would have just set an alert under here or under where all these buys are. I would set an alert under there, or right before it gets to our zone, just press one of these, add alert, and then let the market tell you, hey, it's time. And so when it gets to our zone at that specific moment, right? That's when we know, okay, it's a good time and it's a good price. So that's all we're looking for, man. We're all just looking for the right price and the right time in everything, really. So anyways, guys, for homework today, what I would love for you guys to do is identify 50 setups, and just look, like, document them all and put them in your journals, put them in your trading journals, put them in whatever your notes, whatever it is that you're using, put them in there, have documentation and see it play out. Because the only way you're going to build your own confidence with your trades is by building evidence. All right. So you need evidence to build confidence. So anyways, guys, appreciate y'all. Much love. I will be back on Go Live Sunday or Monday. And, you'll find this recording on my YouTube. I'll upload this actually tomorrow. Anyways, guys, much love to y'all, and see y'all soon.